Good morning, everybody.
Hello, good morning.
Good morning, Steve. How are you?
Good morning.
Hello,
Good morning, Dale.
Good morning, team. Good morning, everybody.
It's a wonderful
we go.
day.
Ready for day two.
Ready for day two, indeed.
You know, Dale, I don't think it's earlier for anybody else unless they live in Hawaii.
Blake, I heard the owl again this morning. It made me laugh. I go, whoo. Hi, Al. How are you, buddy? Anyway, great schedule for today. Yesterday, what a nice kickoff that you had yesterday with Danielle. Some great stuff, Blake. And, you know, how you doing, KMan? And this is a crew that we have here for today. And it's going to be a great day. And I just want to clear something up right away before we get into some charts, because I think the world may have changed yesterday. I'm wearing this shirt, Blake. It's not a regular American flag shirt. It's entitled America in Distress. You could tell the white, all the fields have stuff on them. It's not clear. So it's America in Distress. And it's not because we have political division. And it's not because of the Fed. And it's not because of inflation. It's because after the event, Steve is coming to America. And if America was ever going to be in distress, we're going to see how it handles having Steve in the U.S. next week. And who knows?
Sell the dollar.
Sell the
dollar. Dollars peaking with Steve coming here. He brings us all kinds of luck. So
just so people understand, Steve is actually after this event. He's traveling, across the world, and he's going to be staying with my family. And I'm not so worried about the dollar. I'm more worried about my
your family. Your family is never going to be the same.
my teenage kids having to share their spaces with them, so it'll be great. We're gonna have a great time, and we're gonna have a great time today on the on today's show. We've got a great show packed in for you all today. Great schedule, but Dale, we're gonna spend a little bit of time in distressed America talking about the dollar and really some of the moves that happened on Friday. I think. And I want everybody to know that every single day we provide analysis and help you prepare for your trading day, making money in the markets, giving you guys not only a background of what has just happened in the markets or what is currently happening, what's the news that's really influencing the market each and every day, but we also want to make sure that you have actionable ideas and know how to take advantage of these moves. I mean, when everybody's like, oh my gosh, why is the bond market moving? And we're like, well, there's some key technical levels, and then we have central banks moving, and it really helps prepare our traders take advantage and make money throughout the course of the day. And we offer two shows. The Flow Show, which is hosted by Ryan and KMan, and then we have the Face Show that's hosted by Dale, and then it has the rest of the Forex Analytix team there as well. And Stelios happens to be in both. So if you guys like precious metals, you get to talk about precious metals at least twice a day, right, Stel?
Don't pigeonhole me.
All right.
Stel and I are in the same boat on this one, Blake. So.
Yeah.
I think that we could be approaching. It's Stelios's time in silver. I think that we're.
I think we're getting there, but don't think we're quite there yet. But we'll talk about all that when we get to it.
Yeah, but anyway, Dale, why don't you go ahead and take us through kind of like the basics of what happens every single day. And remember, these are free, guys. Even if you're not part of the Forex Analytics community, we have more shows that we do specifically for the Forex Analytics community that really break down a lot of different asset classes, top-down analysis, and we get obviously digging a little bit deeper because we have more time. But why don't you take us through what we do every day?
Well, I think this was the event, Blake. I mean, if you go back to any 4 hour, can you guys see my screen?
Yes, sir.
Okay, so And we'll bring KMan in on this. So it was intervention. Is KMan with us? Ryan, was
I
it
am.
intervention? KMan, Ryan yesterday.
Yeah.
Okay. Was it more than 1% of their reserves? Like last time, did they come in heavier?
I haven't seen any data yet or any estimations yet, but it must have been a pretty penny. But it's not alone the intervention that was interesting, but also the timing of the intervention.
Yeah.
We cautioned already that there was a risk because of the amplitude of the move in the past couple of sessions. And we know that Kuroda specifically said that when dollar yen would move 200-300 pips in the wrong direction, that is up in this case.
We talked about that all week.
In one or two sessions.
Yeah.
There was a risk for that they find it excessive. So we opened the day before. We were trading well in the 149s, low 149s, and then we went up to close to 152. You take that over a session and a half, that's about 300 points. So that's one thing. Then there was we were making tops in the US yields and lows in the bonds, and all of a sudden we had a well-timed article in the Wall Street Journal by the new Fed whisperer Nick Timiraos, and the dollar started to turn a little bit, the yield started to turn a little bit, and then as per magic, we saw the interventions come out. I don't want to guesstimate on amounts. I don't want to guesstimate either on the number of on the rounds, the number of rounds of intervention, but we have to put it in a double context. So they intervened, the timing was there, the amplitude of the move was there. I think it was also the risk if there wouldn't have happened anything else with the dollar, there was a risk of really continuing into the Friday afternoon. So and then we had this Wall Street Journal article. So there has been intervention, but I also do think that there has been a bit of natural take profit selling in the dollar, or people being long at wrong levels, starting to get out on a Friday afternoon ahead of the weekend. So that made this whole move a pretty violent one we did.
How about the durability of this move, KMan? I could, we can just go back to the last effort, and the candles, the magnitude of the candle is bigger, but this one kind of had a mid-range close, and markets always want to test central banks out after they come in, because conventional wisdom is they can't, the market's bigger than them.
Yeah,
right.
But
so you think this has some durability under 146? Technically, looks like it could seal the deal for a while. So will the BOJ come in and follow through with intervention next week?
It could actually be the case, because we've seen, but it could. I'm not saying it will, but it could, because we have seen this Friday reversal from a high in the dollar to, globally speaking, quite a weak close for the dollar in a lot of currencies. If you look at the reversals that we've seen in all the majors, really, or whole G11 sphere, it's been quite a move. So
yeah, just look at the candle on the weekly dollar, and unlike the yen, we never made a new high. The pop that we had on Friday didn't even take out this high. I was surprised, being Forex stop hunter. I'm always surprised when they don't gun for stops over a high. But very negative close on the week. It's a 2-week reversal. The dollar could be in for, bringing Grega. I'm not an Elliott wave guy, but maybe we get a C for a correction, or this is 3. And I think the world changed. I'll
let Grega comment on the text of it, but from the flow and perhaps a bit fundamental side of things, we did see some really decent clean out of dollar longs on the Friday afternoon. So
yeah,
can they continue to push it? They could on a Monday take advantage of the market being less uber bullish dollars and buying blindly dollars, they could try to push it lower and through this prior high just after the former BOJ meeting. They could try to push it on a Monday.
Well, go ahead,
And
Blake. Do you think we're going for 110 here, buddy? Take out this
real quick, can I just say something about the dollar? We're also heading into that into the quiet period for the Fed, right? So you know, with the Fed meeting coming up, what is that, November November 2nd? Yeah, it's November 2nd. So we got about a week and a half. So a week and a half, you know, it's going to allow people to really process the you know, activity that we've seen from the Bank of Japan. You know, we're obviously getting, you know, the Bank of England is being stirred up as well. You got all these other central banks that are kind of, you know, starting to move. And now you have a quiet period from the Fed. And now at this point, you got people that are going to be second guessing their dollar longs. Now, my assumption is, you know, when the Fed does meet, we're going to find out that the Fed is hawkish and they're going to continue with their, you know, rate hikes and, you know, might even push that terminal rate. The idea that the Fed might even put rates back above 5%, but that gives us a good week and a half for a dollar pullback, right? I mean, this is a great opportunity, especially after having such an extended move, that we might actually see some people going, well, you know, maybe I need to pare back on some of my dollar trades. And I think this is a tradable high in the dollar, at least for the next week and a half. What do you guys think about that?
I totally agree with you, Blake. I think this is a nice short window of opportunity. I said it last week as well, when we saw the beginning of, again, some type of a recovery in stocks. I remember that my comment specifically was, perhaps this is the beginning of a corrective move higher, but brace for impact, because at the very first days of November, when we have Powell speaking again, there is a huge chance that we're going to see him disappoint again investors, right?
Well, and that may end up just being a failing rally after this week. It depends on the next week and a half, right, Blake? If we take out some critical support, perhaps the interest rate hike is another fade to sell dollar strength, depending upon how deep this pullback is. And, you know, look at Aussie. Commodity currencies have been the weak sister. It's a pretty impressive day. You know, it looks like a bottom
huge
to me.
Reversal.
And I know you love Aussie long term, and there's Canada. So the commodity currencies, which took longer to peak or bottom, did so this week in my
yesterday. I managed, while we were doing the event, I managed to get aggressively long the Aussie dollar yesterday. So I went out the weekend pretty aggressively long. I added to it. If you were in the Forex Analytix chat room, I think, I forget who was talking, but I'm like, I post what I'm doing in the trades room, as many of us do. Ryan, KMan, we all do in the and I've been waiting for the break above 36.50 all week. And when you have a bullish outside day like that, and you have a recovery, and you have some massive dollar selling, I mean, that was an opportunity that we had to take even while we were doing this show, so or this event. So anyway, I want to shut up for a minute and let I know Greg is here, and I know you're going to bring everybody else on.
Yeah, I want to bring Ryan in too as well. So Risk liked it. Been talking for a long time that a weaker dollar would be relief, that the market would celebrate it, that it would be risk on. And I know everyone on the panel disagrees with me except Blake. We were talking about after this pullback that new lows were not likely and more risk taking could occur. And I actually think there's a move coming to 4,100 here over the next weeks. So risk looks good. And the big question I have, like KMan, you talked about like the 10-year coming in a little bit, almost a reversal day. But you know what really scares me, and I'm glad Joseph Wang is next, is that even though the yen caved and the 10-year tried to reverse, TLT could not even recover. We have a sovereign debt problem here. You know, I'm going to ask Joseph, the Fed better come in here soon. And now, if this is the way it's going to go, probably the last thing the U.S. economy needs now is for yields to start steepening. What do you think about that, KMan? You know, everyone. Go ahead.
I think it's going to be a really interesting chat that we will have with Joseph, because I do have some questions for him as well about exactly what's going on there, and QT, and the market reacted pretty violently yesterday. We saw yields coming across the curve, but then
not the long end.
Come again?
Not the long end.
Yeah, can I?
Exactly.
Do you mind if I? While you guys are talking, do you mind if I take the charts, Dale?
No, I just want to show one more thing, Blake, and this is something else.
Okay.
Look how junk is holding up better than sovereigns. What does that mean? I don't know, but go ahead.
No, but I think the yields were coming in, but the close that we saw yesterday on the yields front is not yet bearish, right? We're still above 420 on the 10s. We're still hanging around in the 2s and the 3s. I'm just hovering around them right now to see where exactly those closes were, but we're still like the 3-year is still above 450, and the 2-year is just below. But we're still hanging around those 4.5% marks there. And so the FX market again did the swing this time. And I just want to come back 1 second on what you said about the Dixie, the dollar index not performing a new high. But remember what happened in the Dixie the day that the cable got absolutely trashed, right? And it took most of the currencies with it in sympathy, and it happened during the Asian period, and typically the period of a bit less volatility. And I think since the euro dollar is more than 50, the euro is more than 50% of the Dixie, right? And that came off like 2 big figures in that day, which to me, right there and then, it was just on the back of the cable taking everything with it, and perhaps that real low on the high on the Dixie that day looks a little bit like a fakey to me, just because of Asian market took everything with it in correlation. You know what I mean? So in my opinion, it's a bit logic that we haven't done a new high yet in the Dixie, but based on the yields, of course. I mean, it's a fact. It didn't perform a new high.
So it's a bit of a false high. You're saying it's not a real high, like the cable low isn't a real low in terms of the fundamentals.
Yeah, the cable low really seems like a complete washout and panic move, right? Even if the situation in the UK gilt market was not good, and there was a liquidity issue for the UK pension funds, or even foreign pension fund, because we heard somebody, I think in America or so, handling UK gilts who got in a spot of bother, and I think it's just one of those panic moves, you know. And really, if there would have been a lot of liquidity, I'm not sure that we would have been below the prior lows around this 105 or 106. I don't think we would have ever been below, to be honest.
So I'm just you know, as you're talking about certain assets, I'll bring up the charts over here to give Dale a little bit of a break on his charts. So you know, and here's the sterling. Now I want to just ask maybe everybody around the horn here. You know, do you guys think? And this is a point that Mark Chandler from Bannockburn brought up, that because of the sterling, what's that?
Love Mark.
Yeah. You know, Mark is a dear friend of
not as much as Stelios, but
he's a dear friend of our community. And by the way, just so you all know, and I don't know if everybody knows this, but Dale he interviews like the entire FinTwit community literally every day, and he brings in somebody new, and he brings in Mark all the time. But Mark mentioned that because the sterling hit an all-time low in Asia, maybe a real low was created. So what do you guys think? I mean, do you think this was the low? What do you think about that? Let's start off with KMan, because you were speaking last.
Coming in the cable?
Yeah.
I think it's going to take a lot to go back down there and break it. It's really going to take a lot. And there's, of course, two sides to a coin all the time in every currency pair. But I don't think that based on what's happening on the political side right now, it's going to take a lot to get back down there, in my opinion. Also, and I think Grega also and we have like the same levels that we look at, and we went to retest them, which were low 109s, and I think that is going to be very important going forward. Those low 109s that we reprinted there, the last low. You see what I mean? Where your flag button,
right here.
Yeah, right there.
Yeah,
That's going to be mega important level, in my opinion.
Yeah. Okay. Well, you know, that's. I think that's a great point technically. Ryan, what do you think?
I think that low is an anomaly, purely and simply an anomaly. And the reason I say this, what was the level we were watching before that happened? Does anyone remember? It was
before.
It was the Soros low.
Yeah, it's an all-time low.
My Uncle George did that.
we were all looking at 105.50. Okay, that big low down there. Everyone was looking at that. Now you flick it into an hourly chart for me, Blake.
Yeah, give me 1 second.
No worries.
Heading over there right now.
Right.
There you go.
After we got that anomaly, what was the next low?
105, basically 105.20. It was a retest of that actual real
great point.
Yeah.
Eagle eye, Ryan.
Eagle eye. So that to me, after that noise, the real level showed up. The real level showed up again. All right, give it 10, 15 pips, whatever you want to do. But that level came way back in. We bounced a significant amount, came back down, hit that level and held. That tells me that prior low down to the 103s was a pure anomaly.
Okay, so here's the question, and I'd love to hear from Grega and see if he's got a count. So Grega, get your charts ready. But this is the real question. I believe that the sterling is created a low as well, and it's tradable. We know what our risks are from here if you're going to be on the long side. But is the sterling going to outperform or underperform, like let's just say the euro? So are we going to see it underperform other currencies? Maybe we see this pound Aussie, pound Kiwi, euro sterling higher. Or is it going to be the other way around? And maybe that has more to do with who's going to be prime minister, right?
Yeah, that's going to be a very big part of it. And I've said this on the Flow Show and yesterday on Face. The most bullish scenario as far as the next PM is concerned is someone like Rishi Sunak winning the leadership, but being backed by a vast majority of his MPs. And I'm talking in the 300s. If it's a split, if he just scrapes through ahead of whoever it is, Boris or Penny or whoever else, if he scrapes through, that's not going to be positive because he will be in the same position as Liz Truss, a fractured party, two camps, all fighting each other, can't get anything done, and we're no better off, and that's going to be pretty negative.
It makes sense. Okay. Grega, since you're here, instead of going directly to Forex Analytix and reading your counts here on Forex Analytix, why don't you go ahead and give us a quick view of what you think is going to happen with the sterling? Let's see your charts.
Yeah, actually, we covered this one quite a few times here. I've been looking for this very big wedge pattern, and I love the idea that despite this very strong and sharp sell-off, we were able to print a new low and then significantly turn back to the upside, back above that line. Normally, this is seen as a temporary throwover, which could lead us to further strength here in the near term. Also, whenever we had this a few percentage move in just one session or so, pound was the one that was able to recover pretty fast. So I think that there can be more upside. If you look here also on this ETF, notice the volumes here at the recent after this recent drop. So this normally occurs at the end of the higher degree trend. So I think that we have a tradable low here and that we could see more upside. Now, for those who is not familiar with an Elliott waves theory, let me just highlight that whenever you have 5 waves moving into one direction, it means that sooner or later, after this fifth wave is done, the market will slow down. So even if just temporary, we are going to see a recovery, I think that we can be headed here back into these levels that we've been seeing during the summer. And in the near term, obviously more upside for pound. Also, you mentioned earlier that maybe US yields are going to see the resistance here. Well, the US yields have been rising quite significantly, but still cable was doing pretty well no matter what happened in the UK in the last week or two.
Now that chart's a little deceiving because you're pointing at levels that might be around 112 to 115, but in spot terms, what would that be for the actual pound dollar? Because
1.2 level, 1.2, I think it's very could easily be achieved. As I said, if the US yields are trading at the resistance and we are going to see maybe just temporary pullback in the next few weeks, few months, I think that pound, which is doing quite well based on the US yields where they moved, I think that this could easily be driving much higher when US yield stops. And maybe we are at this point in the near future, especially after these Friday moves.
You know, as much as I'd love to just talk currencies all day, but and we love seeing your charts and your work, Grega. Can you shift gears over to the S&P, and then we can all as a group discuss, you know, the kind of the broader markets in general, what you guys are seeing. You know, Dale, I know you not just look at the S&P, you're looking at everything, as is, you know, everybody else here. So let's take a look at what your count is on the S&P, because we do look at those broader markets, because the broader markets do matter.
Grega's copying me again, Blake.
Dang it. Look at Grega. I mean, he actually just copy pasted your whole chart, Dale. All right, Dale has one trend line and a candlestick. That's it.
Keep it
all right,
simple.
Grega, what do you got here?
Well, actually, I'm still tracking this whole movement from the highs as a potential counter-trend movement. I think that if the Fed obviously could be moving towards the end of this hawkish cycle, or at least maybe if speculators think so, then this will also be visible through the price action. And what I see here is a free wave decline. And notice that VIX here, which is at the bottom, is quite close to these higher levels, meaning the extreme zone. So I think that there can be some very strong support around this 3,500. Of course, we could go a little bit lower, but I think that eventually towards the end of the year, we will probably see higher prices here on stocks.
All right,
VIX,
you know, and that's interesting. And I'm gonna take back
VIX
over the charts.
Sorry, Blake. VIX on 35. Grega is indeed resistance.
But it's not extreme fear, right?
Exactly. Steve? We've been showing that multiple times. It is indeed a resistance zone that has been created, but it is far away from extreme fear. Every time.
You know, and I think that was one of the big warnings that we had last week. It's like, come on, you know, volatility should be up at 40. If we're going to be breaking down to 33, 3,400 in the S&P, which everybody's targeting, why wasn't volatility trading at 40? And I think that was a really big canary.
I guess the answer is because the trajectory lower has been relatively not subdued. Yeah, it's not, we're not crashing lower, so it's kind of orderly with some pullbacks, and this is something that's probably giving the Fed peace of mind to say, yeah, the markets are not crashing yet, let's keep going.
Well, that's exactly what Danielle DiMartino Booth said yesterday. She's like, you know, the S&P, excuse me. She's like, you know, because she knows Jay Powell, and she knows all the, you know, a lot of the Fed you know, members. She's like, what they're thinking is let the stock market rally. That's going to allow us to be more, you know, dovish. I mean, or hawkish, excuse me, and allow us to continue to raise rates. And this plays right into that idea that we were just talking about. And I'd love to get, again, everybody's views on the S&P here. But let's say we spend the next week where you get people going, oh crap, we got a big reversal, the dollar's pulling back, you know, S&Ps recover, you start getting that S&P back to the 33 or 3,900, 4,000 level, and guess what, the Fed's like, yeah, you can take that rally, and I'm gonna shove another, 75
pips.
basis points up your rear end and give you another one coming, on our next meeting. What do you guys think about that?
Blake, Grega didn't want to say it, but his count implies, if this was all corrective, new highs in the S&P. So he doesn't like to make these long-term calls.
Yep.
But if he's saying that that was corrective, right, Grega? And that we may be completing something here, it could be more than a bear market rally. Maybe what you're saying and Danielle's saying is the Fed wouldn't mind new all-time highs next spring in the market.
But Dale, keep in mind that in order for us to see new all-time highs, we really need to see a pivot that is completely opposite to what
maybe
Mrs.
we don't need a
Martino,
pivot.
Implied. I don't think there is any
a pause.
With yields here, I don't think we can see
no
all-time
chance.
highs.
Greg, am I misinterpreting your count?
Excuse me?
No,
Am
you're
I
not misinterpreting your
count?
My point and Stelios' point is that for that count to come into fruition, just pausing at 5% rates or something is not going to be sufficient.
Yeah,
there
but
is no way
maybe the question is why they lift the rates towards 4 or 5% so fast. Maybe because they realize that maybe in next year there will be crisis and they need room so that they can move back a little bit if needed.
Yes,
yeah, they
absolutely.
need that ammo.
And you have to
if
take.
they will do that, I think that S&P 500 could easily be back up to 4,500.
Yeah, but they have to make a U-turn, exactly. And you have to take, at some point, you have to take a few steps back, which I like always doing. And you look at what the average consumer is faced with. And they're faced with increased prices in everything. Most importantly, energy, food, all the necessary stuff. It doesn't matter that TVs are still cheap. The stuff you need to survive is getting more expensive. And moreover, you are getting yields and mortgage rates, which are, 2-3 times what they used to be a year ago. So, a 20-30-year mortgage payment now is double or triple. So you're seeing the wealth effect. Basically, people getting destroyed because, what is the average person's wealth? Well, it's their home. And this is getting, they're getting crushed now. So the Fed keeping rates this high for longer, they're going to see this, this come through to the economy, and I think it's going to be. Yep. What do you think?
Sorry, not to mention, Stelio, that at the same time, the ability of fiscal stimulation decreasing substantially because the cost of servicing debt is increasing substantially.
True.
So it's a double whammy. It's not just monetary policy that has become a lot more strict. Is also the fact that fiscal policy will be extremely hard to go back to, so highly stimulative levels as it was, because there is an objective issue.
It's a triple whammy, because on top of everything you've just said, they also want to put people out of work.
Exactly.
So you can't afford your house, you can't afford your food, and now they're going to put you out of work.
Lovely cocktail. Hey, America in distress, and they should make a shirt, the globe.
The whole world is in distress. Every country is facing the same thing now. It's and we're seeing all the lagging indicators, like unemployment rate in the US is still low, but you get all these big corporates announcing, oh, we're laying off 10%, we're laying off 5%, 20%, whatever. This is all going to feed through, and it takes a few months. So like I've said for a while, if you're listening to the Face Show every day, I think first quarter of 2023 is going to be difficult. Very difficult. And I think the U-turn, personally, the U-turn from the Fed is coming a lot quicker than markets probably expect. And I think the pivot or the start of this will be the 2nd of November. They keep their hawkish tone. They hike 75, and they probably indicate that they're going to keep going at a pretty fast pace. And I think that's when we see risk tanking, and that I think is going to be the terminal move in equities, in the dollar, in rates. But I don't think we're there yet.
Exactly the same camp. I think they got called out not raising in time, and they're going to get caught out raising too hard, too fast, and it's going to hit them firmly in the face.
Yeah.
Hey guys, just I wanted to illustrate this because Dale, you had the charts at the time, and I'm going to go back to the bond market move. The main candlestick that you see here is the 30-year, and the 30-year continues to it actually closed near its lows.
Is
But
that
you
a
had
shooting star? I saw someone say that it was a shooting star.
You can see that on the yields on like the 10-year, but look at the shorter end of the curve where we have the 2-year, 5-year, 10-year all reversing yesterday higher, and that's all these line charts. And then you had the 30-year that just stayed.
That's what I mean.
Pressured. Yeah, I mean what is that move that you see in the shorter end? What does that suggest to you guys?
Just the market is getting set for a slightly lower path. They're going to be close to their ceiling. That's what the short term reflects. People were saying, bonds are melting down, but they're blowing up, whatever. They're not. They're just reflecting where Fed rates are going. Now, if they're not going to continue raising rates, maybe past, say, December, because now they're talking about, this Wall Street Journal story, are they maybe going to start discussing 50s and 75s? Well, all of a sudden, your rate trajectory is not like that. It's like that. So the short end's going to adjust for that, and the long end's still going to see that the ceiling is still in place.
Yeah, and there's a good view of what we view as the terminal rate, or what the market's seeing as the terminal rate, and it's barely even come off. I mean, barely, but there was a little bit of move yesterday. Now we talked about equities. We've talked about the FX market. I want to go and we haven't really talked about crude oil, and I guess we probably should, because crude's been quite the mover as of late. But I'm gonna talk about crude and what you guys see in energy, but I want you guys to think about what your best ideas are. And I think Andre just got here too. I want Andre to be able to chime in on what he thinks his best trade is. Because I want you guys to understand, you all at home, we talk about actionable ideas. It's great when you watch, CNBC or Bloomberg or Fox Business or whatever you're watching, and people kind of dance around with giving you like, oh well, the economy is going to strengthen or weaken. We talk about how, like, all right, translate that into how in the hell am I going to make money right now? And so I want to go around the horn, find out what your best ideas are. I'm going to give you my best idea right now, which has been probably one of my favorite ideas over the last couple of weeks. But we're going to go through that really quick. Anybody have any opinions on crude oil here? Because
Biden.
I know Biden wants it to go to 72, but what do you think here, Dale?
Yeah, I think that last big red candle was his last release of the SPR.
Yeah.
And, the market's already recovered. And it looks just like a very constructive pullback. And I'm not saying 150, but I think we could see 105.
Can't we see 100? I mean, the 200-day moving average here at 98 bucks, and it's like
easily.
That looks like a perfect ABC formation for a recovery.
Yeah. All right. So
I mean, textbook.
Yeah. All right. I don't disagree. I would say, you can see this, the 618 fib, comes in around 83 bucks. As long as these lows hold, I don't see any reason why crude's going to go down. I mean, technically, do you guys, anybody see anything different there?
No, I agree with you, Blake.
All right.
And a weaker dollar should support commodities, Blake, at least for the next, few weeks.
Yeah. There you go. You got a weaker commodity price.
As we said though, right? Be careful because
wait, we got two of you guys speaking at once.
Be careful because Jay Powell might spoil the party, right? Prematurely.
Yeah, again, that's a week and a half from now. So we're gonna everybody's focused on November 2nd, because that's when the Fed's gonna be meeting. Only people that won't be focused on the Fed is Steve, because he'll be here in Arizona.
Fade the Fed.
Visiting from Greece.
Just on what we've been talking about previously with yields and everything and the Fed.
With what?
So if the US is going to run into a big recession next year, what's that going to do for oil? Is that upside for oil or is that downside for oil?
I think it's more of a China story. To be
I was
honest.
going to say, I mean, don't forget that China is just ending today their 5-year Chinese National Party Congress, and
Right.
if they ever start to decide to come back online, then that should, in theory, be supportive for oils and commodities as well. So we have to pay close attention. For the time being, I've only seen political headlines. I haven't seen any market drivers, but I may have missed them. But it's also important what's going to happen with China reopen after their Congress. What the PBOC is going to do, what they might do about their COVID situation as well, if they decide to go back online, which I think there's a fair possibility.
That's what Copper's saying.
That should be supportive for oil and commodities as well. Can I just say one thing, that why I think that stocks are not completely collapsing? Because the Fed's balance sheet, because the balance sheet and the liquidity in the system is still very, very, very high. And I want to have a chat with that later about that with Joseph as well. But
I and by the way, Joseph is coming up in 20 minutes. I'm sure you guys will be talking about the balance sheet for sure. But since you're speaking, and then I want to bring in Andre.
But helps what is going on right now.
KMan, what's your best trading idea right now? What are you buying or selling at this moment? And why?
At this moment, I'm still in carry trades. I still like the American block. I'm still long MEX. I'm still long-term silver, and I'm really starting to itch to add. And I really want to see what's happening with China, if they're really going to reopen. If they continue to remain strict and at the same time PBOC relaxed and everything, then I think dollar China is still going to be a buy on dips. And I wouldn't be surprised to see a bigger correction in dollar yen, and I'll be putting on my butcher gloves and trying to catch those knives if it really comes back closer to 140.
Sounds great. All right, KMan. Hey, Andre, good morning.
Hello, everyone. Good morning. Can you hear me?
Hi, Andre.
Hey, Andre, we can hear you, and welcome. Glad that you're here.
Thank you very much.
Hey,
nice
you know, one of the since you're just coming here speaking for the first time, we're so glad to have you. Yeah. You know, Andre is our in-house harmonics artist, because I mean that's truly what your work is artwork. Do a couple of things. I want you to take the screen just for a moment and give us your best idea. Show us why it's your best idea.
No, can you see my?
Yep.
Yes, mate. We can.
We can. S&P. Okay. You're talking about the SPX 500, and I think in order to become bullish, I need to see a 43.25 broken resistance, which may take some time to break. But I also see a potential for edge and shoulders formation, an inverted edge and shoulders with resistance at 38.07. Which should target the 39 or the 4,000 and complete the bearish sharp pattern that we see here. So this is just an example of what may happen for the SPX 500 on the let's say in the short term. I have a few positions already. I have Aussie. I have longs for the Aussie. I have the German DAX. I took some positions from the bottom. I also have a small position, non-leveraged position on Ethereum for the upside. Well, there are a lot of things that may develop during the next weeks. But oil,
dollar pulls back, everything rallies, huh, Andre?
Exactly. If that happens, but not always, not always, but we may say that. But on oil, we have someone said we have the golden Fibonacci at 84.32, so we have the golden 61.8 holding the most recent lows. I said so actually you have that chart on the Forex Analytix platform. I said that a broken resistance at 84.28 should trigger or could trigger an upside momentum for crude oil. We have this channel resistance, and there's only two things that may happen in this structure here. This, in my opinion, an outside return, and I need to see crude oil turning inside this or trading inside this channel again. And obviously that will increase the probability for a breakout of the support level. And of course, if that will happen, we need to adjust our mindset. But I'm bullish for crude oil. I have this support at the golden field, the previous lows. It's my kind of an invalidation point. So I still believe there's more room for the upside. And I have at my projections, very simple projection, a symmetrical pattern projected at the 100. So why the 100 is important? Because we have the Arabian, the Saudis have said weeks ago that this is the price that they want to see the price of crude. So I will not be surprised to see that price being achieved again later. But as I said, during these markets environments, we need I need to play on a lower time frame. I don't tend to increase my time frames. We have a few examples of what did happen before for the Australian dollar versus the New Zealand. This is just another example of a bearish crab pattern at the golden Fibonacci extension level. So we assume that after the completion of that pattern, which converges with the reinforcement of this channel, I assume that the pattern will provide us with a nice opportunity to go short. So, and that's what the patterns offer us. It offers me an entry point, it offers me a target, and I can, based on that expectancy, I can create a scenario to trade. I have my reward, and I can adjust my stops according to my expected reward, because as I said multiple times here on Forex Analytics, I never entered the market to lose more than what I expect to win. So based on that, so if I'm targeting a 3% targets, so I don't put my targets above that limit, using an example of a one-to-one risk-reward example, which we tend to maximize on profit. So we tend to decrease our risk and increase or try to maximize our profits based on that. So that's what.
All right. Well, Andre, we got about 13 minutes. We're going to go around the horn, but
sure.
I'm taking away your best trade is crude.
It's a pleasure.
Is crude? Is that your favorite trade right now?
Yes, it's crude.
Okay, crude. Very good. All right. So moving along and back over to let's go back over to Stelios. Stelios, what is your trade du jour right now? What are you thinking?
Crude is very up high my list, so I'm gonna go with the next best thing, which is dollar Norway. And in line with the view, I agree with what you said before, that I think going into the Fed meeting, there's probably going to be a little bit more dollar weakness, a little bit more risk appetite. I like dollar Norway because we're very close to these lows. 1042 if I recall, and if this gets
that on a monthly basis, that that's the post-COVID lockdown high to low. It's overshoot of a 618, right? But
it's an amazing.
That's what Canada and Aussie did. Blake, the same thing. All the commodity currencies did not take out their COVID rate.
No, not even close. But anyway,
I like Norway because obviously it's dependent on oil quite a bit. So in line with that, I like a short going into the Fed. Obviously, on the day of the Fed or after the Fed, I still think they're not going to disappoint. I think the Fed's going to be hawkish. So this is a trade that I would take going into it. We have to break, obviously, the low. But if we do break 1042, I think that's a really nice, even at these levels now, I think it's a nice risk-reward short. But I would wait to get the low taken out, and then I think we go to 1020 pretty quickly. So yeah, I like that basically.
All right, well that's good. Now remember, the crown or krona, however you want to call Norway's currency, is not the Norwegian central bank, but you got to imagine their portfolio is not doing so well, right?
Yeah, because they're heavily into equities, right? But
the U.S. equities and a lot of tech stocks too. So, woo.
Yes.
All right, Stelios, great idea. Ryan, what do you think? What's your trade du jour?
Yeah, I think it's the Aussie as well. As you know, I've been buying it since the 64s. So sitting on this one, it's looking like it's finding a bit of a bomb. I'm not sure whether this move is real or just on the back of what happened yesterday. We tried several times to get above 63, 40, 50. Couldn't do it, couldn't hold it. We're above it now. 64 for me is the make or break line. If we start getting above there, then we should be heading higher. If we can't do that, we stay in the area.
That is that 618 retracement as well. So, we could be above there, actually even going into Sunday, right?
Yeah. But I mean, the picture there in the Aussie is similar for cable, similar for the euro. Even as we've seen yields make new highs, the dollar hasn't strengthened to new highs in those pairs. And, that for me is a signal. If you couldn't find a bottom over the last 6 months, now we've got signs of a bottom. Euro, Aussie dollar, Kiwi, you name it, we've got signs of a bottom. Doesn't mean we're out the woods, but it's going to take a hell of a lot of hawkishness from the Fed to start getting us to new lows in those pairs. So just on that basis, I'm looking to even sell the dollar again, dollar yen, at a bit of a get out of jail card yesterday with the intervention. But yeah, I'm still firmly that the dollar is going to find a top.
So was that convention?
Nice.
Was that intervention confirmed, you guys?
Yeah,
it was. Okay, all right,
yeah,
very good.
So
all right,
a few headlines out saying it was an intervention. Yeah.
To be honest, I never doubted this is an intervention. I mean, the move is.
Yeah, I mean, it was aggressive. Right?
It was a strange one.
Textbook. Yeah. B, we're talking about a currency pair that we know that just a few weeks ago we had another intervention, right? So.
Yep.
I mean, yeah,
and that was 20 billion. So I wonder if they spent another 20 billion right there. It's pretty almost an equal leg, close to. Speaking of which, Steve, you're here. What's your best trade, near-term trade, other than selling stocks? They're going to 1,000 on the S&P over the course of the next 10 years. What's your best trade near term?
I've successfully so far sorted twice the S&P. But yeah, I can't claim that this would be my recommendation at the moment, because indeed, in the days ahead, there is a very good chance that we're going to see a continuation of this recovery higher. Crude oil has been in my radar since we met the 77. I had a downside target at 77.40. And we've had a very vertical move higher, and the move lower so far has been corrective. So crude is definitely my number one, but I have to add to that. Probably USD yen. I shorted USD yen after the first intervention was mostly retraced, thinking that risking like 50 pips makes sense, because the BOJ should defend the intervention level, because if they didn't do so, that would bring a lot more pain to USD yen. I was proven wrong having to do with their willingness to defend that intervention level, but I was proven right in the fact that since they didn't do that, things didn't work out well for them, right? Especially near the end, we saw an acceleration higher, and obviously that is what they saw as well, and they had to intervene. Now, I'm not a person that likes to repeat the same mistake again and again, but I have to tell you that I think they should probably have learned the lesson after the first intervention, meaning if they don't defend the second intervention, the first intervention levels held for something like 8, 9, 10 days, something like that. I think the market is going to push the exchange rate higher much faster if they don't actually show that they mean business. So I think there is a good chance that if we recover a little bit more towards Sunday or Monday. So if we see a little bit more of a retracement, we already saw on Friday a partial retracement to the move lower. I think it's going to be a good opportunity to short against the highs.
All right, great. Thank you, Steve. Grega, what is your trade du jour? What are you looking at?
Well, I still have dollar Mexican peso on the short side.
No, that's mine. All right, so let's
yeah, let's move forward.
KMan, what? Just kidding. Go ahead. Gosh, dang it, Grega. That's a fault I get for going last. All right, go ahead.
Yeah, I just think that if US dollar is headed into a resistance, as I repeated several times this, and then dollar Mexican peso should have no issues breaking the supports because it's stable, it's doing quite well down here. So if US dollar versus Mexican peso is not rising now, when it will. So in my opinion, there is a great chance that this one will break to the downside when other currencies are now trying to recover. We have seen some very nice move already yesterday. Of course, based on everything what's been happening on other currencies. And I think that this could be a starting point for something bigger to the downside.
All right.
And also,
what's that?
If I may,
crude oil as well, obviously.
Okay. All right.
Yes, if I may address a question which I've already done in the morning edge, but our friend here was obviously, I don't even know if he's a member, I haven't seen the name. He makes a good point. Olamide, he says they defend volatility, not levels. And we've had a member of Forex Analytix that made the same comment when I was discussing the necessity for the BOJ to defend the previous levels intervention. And I had the same comment, and I addressed that comment back then, and I think it proved to be right, is that volatility is higher in USD yen when it's climbing to the upside, because in essence, the yen depreciation has become fundamentally disorderly. So what that means in essence is that if the BOJ doesn't understand that they have to actually defend levels as well, and they just make short-term interventions, they will realize that this isn't going to work, because the disorderly depreciation of the yen is going to resume. So I think not defending levels is going to, in essence, be the same with not defending volatility.
All right. Thank you, Steve, for addressing that. And actually, KMan, you got a question about explain your carry trade, just real in a few short words. Can you do that?
Yeah, I've just put it on the chat as well because I didn't know whether we had time. So basically, a carry trade is you take advantage of interest rate differentials. So in my case, as the whole Forex Analytics community knows, I've been on Euromex for months. It takes advantage of wide interest rate differentials. You get carry, as they say. So you buy the high interest rate currency, you sell the low interest rate currency. I've been doing it against the euro for a long while because I also think, as I said before, that Mexico, kind of like the US, is enjoying a far from my bed safe haven status compared to the euro, as Europe is tangled up in this situation with Ukraine as well. So basically, carry trades, the simple thing is you take advantage of high interest rate versus low interest rate, you get paid for it. And if the currency of the high interest rate is not doing too bad, that's an advantage of exactly the move that we have seen there.
Even in short, I mean, I've been short dollar max. I mean, and you got where the Fed has their rates, and you're still getting paid to hold. Even on a retail level, when they take not only they take their cut, you're still making money being short the dollar Mexican peso, and so it's really a strategy that is really prevalent with a lot of fund managers as well. It's something where a lot of funds like to park their money.
But I want to stress as well that it's important to pick a currency that has not too bad fundamentals as well. That's the basis of a carry trade as well. You can blindly go long a high yielder and then short a low yielder, but if you would have gone long a rand, for instance, you would have been suffering a bit because the dollar rand went up from, what was it, 15 to 18?
Yeah.
in the same space as where dollar MEX has barely moved, give and take a couple of percent, right?
Right.
So,
right.
And that's the basis of a carry trade, is to spot the currency pair that you want to be in.
So thank you very much, Dale. We didn't get you. So what's your trade du jour right now?
Bought S&Ps Friday, looking for 4,100.
4,100.
Yeah,
that's the channel. That's channel resistance. You think we're going to make it all the way up there?
I think we're eventually going to break it.
Whoa! So you're calling for all-time highs? You're calling S&P 10,000 right now?
44, 40. Back to the August highs, and I'll reassess.
Okay, wow, that's a big call. That's a big call. And if you get there, I'm going to tell you, a lot of people are going to be happy. So,
okay, well, Merry Christmas.
Yeah, that would
okay,
be,
Santa.
Happy Hanukkah.
Hey,
you
guys,
know what?
I know I need to turn it over.
Go.
We have is our guest here? Oh
yes,
yeah, he's coming.
Joseph is with us.
Now, you guys didn't give me an opportunity to speak, so I'm just going to go ahead and say this really quick. I've been very bullish the dollar MEX. Greg has tried to steal my thunder, but
forever.
I'm gonna tell you this, this as well. You know, even as the stock market had pulled back, the dollar Mexican peso would not rally. And that's like a very, very big, you know, like that was like the canary in the coal mine, if you ask me, when you're looking at the S&P selling off and you're seeing the S&P selling off and the dollar MEX has not been rallying. But I also go back to the story that I tell, I've told a couple of times to our traders. You know, I was golfing with this guy a few months ago, and he has like this, you know, 300 person manufacturing company, and he has moved it from China to Mexico. And yes, I live, you know, in Arizona, which is just north of the Mexican border, but he basically moved his manufacturing plant over the last several years because of the cost of Chinese labor. And he's like, look, I can produce everything here in Mexico much cheaper. And I think that's going to be, you know, when everybody right now is the rest of the world is, you know, not the whole rest of the world, but, you know, it's the temperature is moving away from China. China's done a lot to their economy to bring up their low class to middle class. Labor is just not as inexpensive, and there are going to be places that benefit from that, whether it's India, whether it's Mexico. So I think longer term, you're going to see the dollar Mexican peso. Long story short, you're going to see the dollar Mexican peso not only benefit from being a carry trade, but you're going to see it benefit as a country, and you're going to see the Mexican peso probably strengthen back into, you know, levels that, you know, you look back where we were at 10, 12 years ago, you know, the dollar Mexican peso was it was much lower. And I'm not saying we're going to revisit all those levels, but I think this is going to give lots of great opportunities for people that are playing the carry trade, playing FX. Okay, I'm done. Guys, I hope you love what you heard here. This is, we cover this every single day on the Face Show. You can go to forexanalytix.com. The Flow Show, that's where KMan, Stelios, and Ryan are typically at in the morning. Then they come back and join us for the Face Show. And Dale, he's our host. He takes us through what's happening in North America before the markets open.